But it's a really interesting point on the FII interest. I mean, actually, both China and India have seen a lot of people leaving those markets. India, actually, even through the rally last year, FII interest was relatively low. So from that perspective, when people do get a little bit more optimistic on the environment, you could see that coming back. But I guess the challenge is if developed market equities are suffering, and are clear not yet, but if they start to suffer significantly, can other emerging markets really start to go against that tide? We think in China they possibly can. India may be a bit more defensive, but it will be the proof of the pudding is in the tasting, of course. I think that's the challenge to getting FIIs interested again. Is they want a bullish outlook overall, not just a defensive place to be.
In which case, the final question, Steve. Now, I'm presuming we'll get a chance to talk to you only after 3-4 months. So I'm asking you a quarter out scenario right now. That is, and I know you invest for the long term. I'm just trying to think as to how you're thinking about the near term, since there are so many moving pieces. You already told us that you are cautious. My question is, if you are kind of figuring out which quadrant to be in and which quadrant to stay away from for sure, between commodities, say debt or global equities or otherwise, if you're cautious on global equities, are you constructive on something else?
So I guess the two places that we like, and a third I'll add in terms of just, I think it's a good place to have an allocation as well. So the two areas that we like are high quality investment grade bonds in the developed world, also in Asia as well. So we believe that that's a good defensive place. Obviously yields are much higher than they have been in the recent past. So just hunkering down in that space is pretty positive. We're bullish on gold. We think we're threatening to break out to new levels in gold, and debt ceiling talks usually when they kick off in a significant way, gold usually does very well in that environment. And also just having some powder dry in cash, I think makes sense in this environment. We are bearish on equities, but we would be looking, once the Fed pivots to focusing on growth rather than fighting inflation, then that's probably a time to start deploying some of that money back into equities. I think we're still some way from that point, but having some powder dry on the sidelines probably makes sense in this environment.